Good morning, everyone. For anyone who may be joining outside of our time zone, good afternoon or good evening as may be applicable. I see we have some people joining us from Moscow, South Africa, London, and Glasgow. My name is Tony Oghenerhaye, and I'd like to welcome our esteemed CrusaderSterling Pensions family to this webinar tagged Nigerian Pensions Industry, Know Your Future. We will be hearing from 3 expert speakers whose ultimate aim is to keep our contributors and stakeholders abreast of industry updates and other important matters in the Nigerian pension space. Specifically, they will be speaking on how PFAs manage and grow your pensions, accessing 25% of your RSA balance for mortgage, some industry updates, and RSA holders' responsibilities. Once again, you are most welcome. Without further ado, I'd like to invite our MD CEO, Mr. Rotimi Adebiyi, to give his opening remarks before we proceed to the presentations.
Thank you very much, Titi. Industry updates as it relates to accessing mortgages, and very importantly also the salient features that also for retirees will want to understand about annuities and also program withdrawal, as well as understanding the new PENCOM directive as regards data recapture. We believe you'll find this interactive forum very, very interactive, as we say, and please feel free to also ask questions. At the end of it all, I believe you will be better for it. Thank you all, and welcome once again. Thank you. Over to you, Titi.
Thank you very much, sir, for that intro. Just a few points to chip in before I yield to the speakers. We welcome your questions via the chat function of this webinar. Please feel free to type them in as the presentations progress. At the end of each presentation, we hope to treat as many questions as we can, time permitting, but not to worry. If we don't get to your questions during this webinar, we will definitely get back to you with the responses within 24 hours. Now, I'll introduce our first speaker, Mrs. Funmi Oluwajoba. Mrs. Oluwajoba is a finance professional with over 25 years experience, spanning professional services, manufacturing, and financial services. She's a seasoned investment professional whose insights will be very enlightening to us all. She will be speaking on the topic, how PFAs manage your pension funds. FT, over to you.
Good morning and welcome to our first in the series of webinar. I'll be speaking to you this morning on how PFAs manage and grow the pension fund, and specifically I'll be speaking on how CrusaderSterling Pensions manage and grow your pension fund. Before I go further, I'd like to say thank you to all our esteemed contributors for making up time out of your very busy schedule to attend this webinar. And I promise you it's going to be a very insightful session and there'll be a lot of takeaways. I'll be talking first about giving us updates on the industry data. As we speak, we have 18 pension fund administrators, 3 closed pension fund custodians, 6 closed pension fund administrators, and our RSA membership count as at December 2022 stood at 9.8 million, and that's the latest update we have from our regulator. And you will agree with me that a count of 9.8 million compared to our population data, we still have significant headroom for membership into the RSA fund. Our investment objective as a PFA is to invest and manage your pension funds in line with the PRA 2014 Act and ensure that we keep adequate records for all your RSA transactions. Adequate records here and accurate records here refer to your statements, remittances, payments, which include loss of job, M-block, whatever payments we've made to you, whether medical, whatever payments are being made, and then also provide the commission and your good selves with information on market return and other performance indices as may be required from time to time. Just a brief history on the RSA fund. Prior to 2018 July, we had only two funds in the industry, and that's the default RSA Fund 2 fund and the RSA Fund 4, which was strictly for the retirees. On July 1, 2018, the multi-fund structure came into existence, and currently we have 6 funds in the industry. Each fund differ from each other in terms of their risk appetite. We have the RSA Fund 1. Membership into this fund is strictly on application from the contributor. For RSA Fund 2, the active contributors are age 49 years and below, while for RSA Fund 3 are for contributors who are 50 years and above. As mentioned earlier, we have the RSA Fund 4, which is strictly for retirees, and we have the Micro Pension Fund, which is targeted at the informal sector. Information on the informal sector as of today shows that they represent about between 65 and 75% of our total population base. And then we'll have the RSA Fund 6, which is the ethical fund, and that's the Sharia compliant fund. Here we have a maximum asset allocation per asset class as prescribed by the regulator. We have highlighted the first 4 rows in red because they come under the variable income asset class and the alternative asset class. Here we have ordinary share, the private equity funds, and the infrastructure fund. And again, as mentioned earlier, I said between the various funds, the 6 funds, they differ in terms of their risk appetite. And here we see ordinary shares for Fund 1 standing at a maximum allowable of 30%, while Fund 3 cascaded down to 10%, and then Fund 4, 5%. And then we'll have our regular other investment classes, the federal government securities made up of bonds and the treasury bills. And of course, we have the state government bonds, corporate bonds, money market instruments. Now we come to our role as your PFA. As mentioned earlier, the role of a PFA is to invest and manage your pension funds for optimal portfolio return. And with all modesty, we'd like to state here again that we are the first PFA to hit the 2 naira, the 3 naira mark, the 4 naira, 5 naira, and currently we are touching on to 7 naira as our fund price currently stands at 6.9256. The role of a PFA includes also to ensure we pay retirement benefits as and when due, and promptly, and then we also ensure it's properly and completely calculated, provide customer support to RSA holders. When we say customer support in terms of advisory, whatever inquiries or questions you may require. And we account for all transactions relating to your pension funds under our management, and we render daily returns to the National Pension Commission. Okay, in the PRA 2014 Act, we have some prohibitions. As a PFA, we are not allowed to borrow or lend pension assets. We don't trade on margin accounts, and we don't invest in stocks or assets that are prohibited. Our guiding principles in CPL, this is not exhaustively, just a few. We ensure that we do deep marketing research, and then we target our entry and exit prices, because you will agree with me that your entry price is significant and your exit price is also significant. So we touch base with the market, and for us in Crusader, there is no black box approach. We drill down to the very minutest of detail. We invest in securities that have potentials for growth with good dividend payouts, and again, in corporates with strong corporate governance. We have other strict internal benchmarks that we also go through, and for each investment that we partake on, it goes through a strict internal due diligence. to ensure that all I's are dotted and all the T's are crossed, because again, I mean, it's your future that's in our hands. Now I want to go to the fund price dynamics. The fund price dynamics, we said the unit price is key because it's the value at which you as a contributor enter the fund, and is the price at which you as a contributor is being paid that you cash out, whether in terms of your program withdrawal, whether it's time of loss of job or payout for, even if it's for RSA mortgage. So again, the unit price is extremely significant. The net asset value of a fund is calculated as the total asset value less the total expenses. And the total asset value of a fund is inclusive of the principal and all accrued interest. And again, it takes into consideration fluctuations in the market. When we talk about fluctuations in the market, talk about price in the capital markets, it's always swinging left, right. On this slide, we have a simple analogy of our unitization. Here we're talking about PG Nigeria Limited, and they have here 5 contributors with remittances totaling 20 million. And you can see that our contributor base spreads across the country. We have the Hausa, we have the Igbo, and we have people from the Middle Belt. So on day one, assuming that this is a new fund, and these are the only contributors we have in here. We have 20 million, and on day one, the unit price stands at 1 naira with a value created at 20 million. So on day one, for these 5 contributors, our fund price is at 1 naira. On day one, we have decided to invest the 20 million in money market at say 13%. It could be with Access, it could be with GT, it could be with WEMA. And on day 10, we have accrued interest totaling 71,000. And we can see our fund price has moved from 1 naira to 1.0035. And on day 30, this particular investment has generated interest or value totaling 213,000, giving the total value of the fund standing at 20,213,000. And that is assuming that we still have the same number of people in the fund. The fund price will then stand at 1.0107. However, I'd like to say that on day 10, for new contributors or new remittances, they will be buying into the fund at a price of 1.0035. And on day 30, they will be buying into the fund at a price of 1.0107. We've made this analogy a bit simple to make it explicit for everybody to understand. But in reality, I mean, we could invest in other asset classes, such as the capital market. We could invest in stocks, we could invest in treasury bills as well. And so on this slide, we have our day 30, and then we can see for each line of contributor, how their fund price have moved from the remittance of Olanyinka Ajayi's 4 million to 4,042,000. And we can see Tasiru Umar, who came in with a remittance of 8 million to a balance of 8,085,600 at the end of the month. As mentioned earlier, I said that fund prices fluctuate, and fluctuation in fund price is a function of quite a number of factors, which includes economic news, political events, CBN pronouncements, the performance of the capital markets, investor sentiments, and interest rates, and then of course, again, incidences in the global economy, in the outside world that will have a significant impact on our performance in Nigeria. And so that brings me to the end of my presentation. I want to thank you very much for listening, and I look forward to your questions. Again, we want to thank you for your commitment and loyalty to our brand. And just to remind you that we're just a phone call away, we're just an email away, and we'll put all our numbers and our email in the chat box. Thank you very much.
Thank you very much, FT, for that very insightful presentation. So we'll go to the chat box now. We have a few minutes. We'll just take 1 or 2 questions and then continue with the rest of the presentation. So we have a question from Olamide Abiodun. Olamide has asked, what is your year-to-date return on RSA Fund 1?
Our year-to-date return on our RSA Fund 1 at the end of Q1 stood at 4.40%, which is a bit decent because it translates to an annualized return of slightly above 19%. And then where we see inflation currently standing at about 21, that's a decent annualized return. Thank you. Over to you, Titi.
Okay, thank you very much, FT. Because of our time, we'll quickly go on to the next speaker, but we'll come back to those questions. So our next speaker oversees the business development division of CrusaderSterling Pensions as executive director. Mr. Femi Dada brings to this conversation his over 25 years vast experience in financial and professional services, and of course, his in-depth knowledge of the pensions industry. He will be speaking to us on something I'm sure we are all eager to know a whole lot more about: how to access 25% of our RSA funds for mortgage. FD, we're all ears.
Okay, thank you, Titi, and thanks, Funmi, for that insightful presentation. I'm thanking everybody once again for being here. It's our privilege. We don't take this audience for granted. I appreciate everybody. This topic is evolving and is largely new, I mean, more or less new in the industry, because it became activated last year by PENCOM, okay, even though it's been in the act for some time, but the activity actually commenced effective last year. We've had a lot of inquiries coming from our customers and also non-customers about how to assess mortgage with your RSA balance. We've had a back and forth in terms of documentation here and there, providing enlightening sessions to many of our customers through various fora. So we figured this is the best time, to discuss this in a larger house. So let's quickly go through the slides. All right, so the first thing I'll tell you is that it is, and like I said, it became activated just last year. The whole idea is that you can access mortgage using 25% of your RSA balance. Okay, if your RSA balance is 100 million, you can take out 25% as equity contribution. So we'll talk about equity contribution in the latest slide. Another thing you need to note here is that this paper or this product is only for residential mortgage. It's not for commercial mortgage, it's not for landed property. It must be a ready-made house. You just move in and unpacking, like kick and move, likely. Now, who is eligible? You must be an active RSA holder in employment, okay? You must have more than 3 years to retirement, and then you must have contributed pension for a minimum of 60 months, which is 5 years. So a quick example, because many of the questions actually revolved around eligibility. Who is eligible? Okay, so I'll just do a quick numeric example. If you started work at the age of 25, okay, and your retirement age is 60, as defined by your employer, okay, it means you are eligible when you become 30 years of age up to when you become 56 years of age. Okay. The moment you hit 57, 58, you are no longer eligible. So the advice is that start from now. Start looking at a house choice that you want to buy and key quickly into mortgage. That's just the beauty of it, so long as you have the capacity for repayment. So that's how eligibility goes. Now, couples can also apply. Okay, so where you discover that as a single, as an individual, your capacity to access this mortgage is not sufficient. Maybe your RSA balance is a little bit low, or the choice property you have in mind is more than your allowance or your salary can push. You can combine with your spouse. Okay, and if in my own case, like where my wife earns far more than me, is a big opportunity. So I'm giving a thumbs up for our women here now to join, okay, the hobby and access mortgage. So it's time to move to Banana Island, as it were, largely. So please, I encourage everybody, improve the lifestyle, improve your standard of living, access mortgage, and change your location as quickly as possible. Now, equity contribution. We've had a lot of inquiries, okay, saying what is equity? They don't even know what it means. It actually means, okay, your commitment, okay, for the facility. So if the bank is giving you 100 million naira loan, you need to bring out 25%, okay, as stipulated by this law. Bring out 25% so that you have a stake in the facility. That gives comfort to the bank. It gives comfort to you too that, okay, you have a running obligation that must be met. So largely, that's what the bank wants. If you don't bring in your stake, you can't access mortgage. And then the good news here is that you don't now need to source for that equity contribution all over the place, from your personal savings, from other borrowed, from other lenders. You don't need to source for it. It's available in your RSA. So you are tapping in from there, pick 25%, use it as your 25% equity contribution. So the only loan you are obliged to pay will now be the remaining 75%. So that's how it works. Another twist to this is that what if your RSA balance is still not up to the equity contribution, up to the 25% value of the happens, you have to source for the balance elsewhere. Another limitation is that you can't access more than 25% of your RSA fund, just in case the value of the asset is so high. So the way around it is to look for a moderately priced asset that your RSA, okay, can carry, 25% of your RSA can carry, and then your capacity for repayment based on your salary can also service likely. All right, so how does it work? These are another round of questions we've been asking, and it's so easy. The first thing you do is to go shopping. Okay, go to those places where you want to buy a property, get a property contract, get a sales contract from a property, a real estate organization. Okay, come up with that. That tells you the value of your asset. Let's say 100 million, for instance. Okay, come to us in CrusaderSterling Pensions. Ask for your RSA statements. You get that. That also tells you how long you've contributed pensions. So with those two documents, approach a lender, either a PMI, that's what a primary mortgage institution, or a commercial bank. Okay, we have a list we will be sharing with you later. Okay, approach them with those documents, and what you are doing effectively is that you are now applying for mortgage. Now the bank reviews your application, looks at the property, confirms that the property for validity, okay, and then for valuation, okay, The bank also reviews your credit eligibility. And two things they are looking at as one, your character and your capacity for repayment. Okay. And 80% of that problem is actually solved because you are coming with an equity contribution from a proper PFA. So character is already given, capacity for repayment, but the bank looks at all that in totality and gives you an offer letter. So you come to us with that offer letter, and then the process is already like 70, 80% completed. We get approval from PENCOM, sent back, now disbursed 25% of your RSA to the lender, who now pays the property owner 100% and now channels your remaining 75% balance of the loan in a loan repayment schedule. So it details out how much you'll be paying the lender on a monthly basis over a period of time, which you call the tenure. So just conclusively, you move into the property, okay, because the PMI gets the document, has title to, and reverse that title to tenure. So basically, that's just a brief summary. We'll move quickly now to your retirement plan. And with that, we'll be comparing annuity with program withdrawal. Okay, you'll be seeing similarities between these fees, like CrusaderSterling Pensions, why annuity is championed by insurance company. Now, we both aim to pay at least about 50% of your last payroll, I mean, your last pay slip, okay, so that you have a good life after retirement. We both pay throughout the life of the retiree, okay, and we pay mostly either on a monthly basis or a quarterly basis, depending on your choice. Now, this is where it gets interesting, okay? Number 5 tells you now that you have an RSA statement with a PFA. You don't have any such statement with in an annuity product paper, okay? So this talks to transparency. It's like your bank account, your bank statement. You can see the growth in your account. You can see the debits and credit coming in. You can see what profits the PFA is making and how it's credited into your account, okay? On a monthly basis, you get to see that. So this talks to transparency. You're able to monitor accounts, you're able to query the PFA to say that there's something wrong with my account statement and then to be regularized, okay? And the next point now is that, there's at the demise of the retiree. In fact, I want you to listen to this very, very, very closely, because this is one of the main things that separates program withdrawal from annuity. At the demise of the retiree, your RSA balance, it could be 10 million, it could be 50 million. Sometimes is 150 million naira. At demise, it paid directly to your beneficiary, okay? But in annuity, is lost. It's annuity today, and we count 10 years, and the retiree gets, is demised. Nobody gets anything from your family. It goes back to the insurance company. So that's the first question you need to answer for yourself. And this is what I even tell everybody. And instantly they run back to program withdrawal. To choose program withdrawal, because nobody wants to lose what you work for in a lifetime. Now, we've talked about transparency, quarterly statements, and all of that. Another very important point here is what we call enhancements. Periodically in program withdrawal, your monthly pension is reviewed upward. Okay, 20% increase, 50% increase, 80% increase, depending on the return that your PFA has been able to give. And that's why it's important you remain with CrusaderSterling Pensions. Because if you listened to Funmi's presentation, we've led the industry in return on investment for the past 10 years, over 10 years. So the larger your fund is, the better or more efficient your PFA is able to grow your fund, the more the enhancements you earn. Also, going back to mortgage, the faster your PFA is able to grow your fund, the more enabled or empowered you are to access mortgage. So please don't lose sight of those 2 points. And those are the reasons why you still have to remain in Crusader-Sterling Pensions. Of course, we are highly regulated by PENCOM. And finally, we don't run with brokers, we don't run with agents, we don't run program withdrawal with intermediary. So we don't pay commission to an outsider. We manage your fund directly, efficiently by ourselves, and then your funds are conserved in your accounts. Thank you very much. Titi.
Thank you very much, FD, for your presentation. We have quite a couple of questions, so I'll see if we can take about 2 or 3 before we go to the next speaker. So Mr. Olubenga Adebola has asked, I am aware that no one has accessed 25% meant for mortgage. I'm about to access that fund, and I would like to know how easy it will be for me. Also, Farouk Ado Aduba and Hamza Ozigi have basically asked similar questions. They just want to know how to process the 25% of their RSA for mortgage.
Okay, Titi, thank you very much. I actually did a process flow for that, you know. Well, the first thing we should note is that this is a new product in the market. Even though it opened last year, we had a lot of back and forth with PENCOM as regards documentation, the list of primary mortgage institutions, the list of commercial banks that had to be approved by PENCOM before we could jumpstart. So that took a lot of months, and it didn't really commence until sometime maybe the first month of this year. And then even at that, there had been some updates in documentation requirements and all of that from PENCOM. So largely, summarily, you can access, because everything is now on the go. You can access the 25% for mortgage right now. We've had a series of applications that we are even currently processing. About 1 or 2 are currently with PENCOM. And for us to pass it to PENCOM, that means by our own standards and all of that, they have passed the checklist, they passed the test. So any moment from now, we expect to get PENCOM approval to disburse. And the moment that happens, is already done. Because before you even got to that stage, okay, the offer letter would have been issued. That means the PMI, the bank is already satisfied. So it's almost a good and selling. So please go ahead and apply. What I will also say finally is that the process to do that, I did a summary, okay, in my presentation, but we are going to have a full process guide when you call us and put you through one after the other. We'll be sharing our details with you, our contact details for effective engagement. Titi.
Okay, thank you, FD. So Stephen has asked, what percentage of increase should I expect upon enhancements?
Well, okay, that's well, I would say it's a tricky question. It's a practical question, absolutely. There's no fixed rate, okay? The increase is actually dependent on how your PFA has been able to grow your fund, okay? How fast is your PFA able to grow your fund faster than your withdrawal level? That determines enhancements, okay? Now, again, I'll take you back to Funmi's presentation where she told you that we have led the industry in return on investment. Our fund price has remained #1 in the industry, especially for the defunct fund for the past 10 years. So that gives CrusaderSterling Pensions that reputation of the best PFA that can grow your fund the fastest. So with that in mind, as your RSA balance is growing a lot faster than what's being returned in other PFAs, your enhancements also gets higher. So it's difficult to say 10%, 20%, 40%. A lot of macroeconomic factors will come into play. And then the skill of your PFA in returning your investment, giving you returns on your investment will determine your enhancement. Finally, there's a PENCOM pen template, okay, which is the enhancement template that will also put in your parameters, all of that, age and all of that, that will finally come out with a figure, okay, your enhancement or your enhanced figure. So basically that's how it works. Thank you very much. Titi.
Thank you, FD. And so now we go to our final speaker, Mr. Anthony Oghenerhaye, who steers the ship of CrusaderSterling Pensions Marketing Department. He's an accomplished salesperson with over 2 decades experience, 17 of which has been in the pensions industry. He is well respected for his deep understanding of the customer. AO, the floor is yours.
Okay, Titi, thank you very much for that. Thank you so much. And I also want to thank the speakers before me, Femi and Funmi. Okay, now we're going to a section that I believe is very, very important to the contributors and attending contributors. This is actually your time in the sense that this is focused on you as a contributor, what you are expected to know, what you're expected to do at this point in time, what are the updates that are necessary for you to be aware of at this point in time. Yes, speakers before me have actually touched on some of them. For example, the mortgage that we just heard about now, and then multi-fund structure and other aspects like the ethical fund, non-interest fund. These have actually been discussed. But what we're looking at here is all about you as a contributor. How do you manage your retirement savings account? Because this account is your name and it is your account. It belongs to you. You have roles and responsibilities in this regard. So your pensions account is all about you and about your future. You also need to be well abreast with the tenets, the privileges that accrue to you as a contributor. So as we go through this, we'll be able to touch on some of them, and then thereafter, you can also contact us for more updates. So starting with the very first one, starting with the very first one, we are talking about the data recapture exercise. Now, the data recapture exercise, as well as KYC, that is updating your record with your PFA, this is actually applicable to those that have been on the scheme, that registered on the scheme prior to July 2019. Now, for those that registered or that joined the scheme after July 2019, you don't necessarily have to do data recapture because you've already been migrated into the enhanced contributor registrations scheme. So you don't need that because you actually complied, so to speak. And so this is actually applicable to those that have not done that. Now, the data recapture exercise seeks to comply with federal government's directive that all data collecting organizations should harmonize their database with National Identity Management Commission. The essence is this: National Identity Management Commission runs the database of the country, so to speak. So all data collecting agencies, data collecting organizations, both private and the public sector, are expected to harmonize their record with NIPSI. So that's the essence of this. This will also help to have to produce credible database for retirement savings account holders in the country. We all know when the scheme started, it was more like a learning process. We had so many issues here and there. Some of us filled physical forms, some filled soft copy forms and all that. So the essence of this is, apart from complying with federal government directive, we are also ensure we have credible database to ensure a seamless retirement planning cycle. So, and it has also become compulsory in the sense that you will not be able to access your benefit, you will not be able to do transfer, do anything that has to do with the scheme outside meet this requirement. So what do you need to do as a contributor? You need to do data recapture. You can contact us. We can assist you. Our team can come to your office and can come to your employer to ensure that we assist you to do your data recapture. You can do it online. We have a link online which you can click on. You can find it on our website. You can find it on our mobile app. These are several platforms to assist you to be able to do the data recapture so that going forward, your accounts will not only be harmonized with federal government agency, but will also be harmonized with your pension fund administrator. And then, of course, you have a smooth sail in running your retirement savings account. So what are the requirements? Simple. One, we require you to provide your staff ID number or any national ID number. This includes your driver's license, permanent voter's card, and then international passport. And of course, the NIMC, that is NIM enrollment slip. This is very important. There's nothing we can do in this regard without you providing your NIM slip. This is very key. And of course, your birth certificate or age declaration, as well as letter of employment from your employer. So once we have this in place, you we have a form that you can fill. You fill the form, either you fill the physical form, is either you fill the hard copy form or you fill the soft copy form, and then we assist you with the entire process to ensure that this is done. Once this is in place, you are now able, we are now able to migrate you to what we call the ECRS, that is the Enhanced Contributor Registration Scheme. It is on that platform that you'll be able to do your benefit registration and benefit application, transfer, and anything that has to do with your retirement savings account. So this is very, very essential that you be aware of this and ensure that you do it. Then the second aspect of KYC regulation that I also wanted to know also applies to contributors that actually registered before July 2019. Now, we had people, even beyond that, there are people that even registered with us 2 months ago that didn't provide the relevant documentations for things like employment letter, DOB, NIMC enrollment slip. You have to provide them. Due to maybe exigencies of the business, work patterns, and the circumstances surrounding your registration at that point in time, you may not have provided this document, but it's essential and very important to have those documents in-house so that we can regularize your mandate form in line with PENCOM's expectation. So the requirement also similar to what you need to provide in case of data recapture, which are your NIM slip, your birth certificate, or your age declaration, and of course, your employment ID or letter of employment. So with this will take up the issue of either data recapture or regularizing your mandate with us in line with regulations and basic expectations. So that is it. And then we'll move on to the next aspect of the position, which is transfer window. I'm sure a whole lot of us are aware of this, but it might interest to know that a lot are not actually aware that they can actually move from one PFA to the other. We are not telling you this so that you can move from CrusaderSterling Pensions, but we're telling you this basically so that you can be number one, be aware, and also inform your friends, relatives, and colleagues to transfer to CrusaderSterling Pensions, because they cannot actually do that. The window is open, and it's very simple. What do you need to provide? Nothing much other than do the data recapture. You can see why data recapture is very, very essential. Once you do your data recapture, you provide all the necessary documents. And I want to repeat, your DOB, your birth certificate or age declaration, NIM slip, employer's ID, and employer's letter. Then you'll be migrated to the platform, that is the ECRS. Once you're on that platform, you can do anything you want to do. That is very, very essential. So with that, in less than 5 minutes, you'll be able to transfer from one PFA to another, actually transfer it to CrusaderSterling Pensions. And of course, this can be done just once in a year, and it's for active RSA holders. And of course, it is free of charge and is done on a quarterly basis. So this is just to get you abreast also so that you can be aware of this and then get your friends or relatives to be able to transfer to CrusaderSterling Pensions. And of course, if you have further questions in this regard, will also be available to assist you. By the way, it is free of charge. If you do your transfer within a year, it's free of charge. Maybe you want to do it the second time within a year, and for whatever reason, you may have to pay a token for that. Okay, so the process, like I mentioned, is very simple. First, you do your data recapture, and then you approach your PFA of choice, and then they will help you with the rest with the rest of the process. Of course, your profile will be validated with respect to NIM, and then that is done. Okay, so I would like to spend more time here because this is very, very essential. It is key to us here. So we need to be very so we need to take this seriously. What we're saying here is, which I've actually hinted earlier on, basically we're talking about ensuring that your DOB is consistent at the point of registration, provide the right DOB, ensure that your DOB with the employer, your DOB with NIM, your DOB with the PFA are the same. Of course, things like name arrangement is also important to ensure that your name's arrangement, surname, middle name are consistent across all platforms. That your contact addresses, if there are changes in your contact address, please also take note so that you can update us. We don't want to be sending your hard copy statement to address where you are no longer there. So that is very important. And of course, if you are changing your telephone number or and other changes, we also encourage you to do that. One more thing very important, ensure to monitor your investment return on a regular basis. That is why we're business. So you, if you monitor your retirement savings account, the return on investment, it will help you to understand what we have done for you as a PFA in terms of partnering with you to grow your retirement savings account and creating wealth for your retirement. So this is practically what we want you to know and to be aware of. Then let me just ship this in also. In case you have a change of marital status, it's important you do that. You have change of next of kin, it's important you do that. Then we also encourage you to do a will. Having a will doesn't mean you are planning to die tomorrow. It's just like saying you're having a spare tire before you embark on a journey. Of course, you have a spare tire in your car doesn't mean that you are planning to have a flat tire on the way. It just means that you're taking necessary precaution. So it's better to have a will instead of waiting for later of administration, which is costly and take more time, and it could become more stressful for the bereaved. So these are some important development in the industry that we feel you should be aware of, because we have students whereby people will come at the end of the day, I want to assess my benefit, I want this and I want that, and they realize that they have not provided the necessary document, or their names are not consistent either with the PFA or with the employer, and this becomes an issue. So you need to take full advantage of this information and ensure that you regularize your profile with us and also that of the regulators as well. Just to add this to it, feel free to visit our website. This will help you to be able to assess your account and then do necessary corrections and reach out to us. So we have our website available, interactive voice responder, our mobile app. Then of course we have the benefit tracker, which can assist you to know the level at what point to monitor the different levels of your benefit application and other. So thank you very, very much for this time, and we're very glad to take your questions and to further enlighten you in this regard. Thank you very much. So Titi, please, over to you.
Thank you very much, AO, for your presentation. We've had quite a number of questions coming in. So let me see which one do I take now. There's a question from Tony Oghenerhaye. He says, I registered prior to 2014. Must I perform data recapture? If yes, please, when is the deadline of data recapture, and how can I ensure that it can be done quickly? Is there a link to log on to? Olabisi Giwa, I think, has also asked a similar question. Olabisi's comment is, I did this data recapture a few years ago. I guess Olabisi is also wondering if she needs to do this again.
Okay, can I take that? All right, for Tony, thank you very much for your question. Yes, it's simple. I mentioned it in the course of my presentation that anybody that actually joined the scheme prior to July 2019 should do data recapture. It is very, very important this time. So if you registered in 2014, then it's expected that you need to do data recapture. And the deadline is actually 31st of May 2023. That means you have just about 5 weeks or thereabout to do that. And we are available to assist you. You can reach out to us after the session. And if you want us to come over to your place of work, we can arrange that with your employer so that we can do mass data recapture for your colleagues, for yourself and others. I think this also applies to BC as well. Thank you. So Titi, any further questions?
Okay, so I'll just take random questions now. So I would call on any of the speakers to touch on the questions so that we can cover as many people's questions as we can. Festus has asked the question, what is your best advice to somebody who is out of job or the country and middle-aged, 30s, after collecting 25% of the pension saved? Will the remaining 73% continue to yield interest, and when can the rest be accessed? FT, can you help us with that, please?
Okay, Festus, thank you for your question. For this contributor who has already accessed 25%, he and he's in his 30s, I presume, he cannot access again until he attains the age of 50. But in between now and when he's 50, he will continue to invest, and he will continue to have his statements. His funds will continue to grow. And because his investment is in a pool of funds with other investors, of course, that then means that he gets the benefit of the pool of funds. So like I said, he can only access again at the age of 50, when that's by law, is the retirement age. And in between, we continue to invest his funds for optimal return. Thank you.
Thank you very much, FT. Ayodele Rotimi has asked, I will be 50 soon. How do I access my pension fund? AO.
Yes, thank you. Thank you, Ayo, for that question. Yes, you'll be 50 soon, and how you are looking at accessing your fund. This also goes to what I said earlier, stating that we should ensure that our records are consistent with our PFA, with that of our employer. For example, you are 50 years old now. Let's assume you retire a year after, and at the point of processing your benefit, you realize that your name arrangement is not consistent with that of NIM, or your age with your employer is different from your age with your PFA, and this become an issue. So what I would advise you to do now is this: ensure you review your profile with your PFA, and so that this the details, your records are consistent with that of your employer, that of your PFA, and that of NIPSI. So with this, you are set to take off. So at age 50, you approach us, and they will give you the guide that will provide you with the necessary guidelines and the document requirement, and they will be able to treat for you. For us, really, we are looking at 6 working days. We call it T+6. So as long as your documents are complete, within 6 working days, you'll be able to access your retirement benefit. Thank you.
Thank you very much, AO, for that. Osaro has asked, sorry, I didn't get the return you quoted. I think this question is for FT.
Okay, thank you very much, Osaro and Titi. The initial question was on the year-to-date return on our RSA Fund 1. And my response was that as at the end of Q1, our year-to-date return stood at 4.40%, and that translated to an annualized return of about 19.06. Thank you. I hope that clarifies.
I see a lot of people have also asked how they can get access to the recording of this webinar after it is over. So the recording will be made available on our website. So you can just go straight to our website after the webinar is over. Or the recording is also on YouTube as well. We're live on YouTube right now. And so you can also head over to YouTube and watch the playback. So our time is fast spent. Unfortunately, we will have to stop here. But as promised earlier, we will respond to all your questions after the webinar. I'd like to thank our speakers as well as our audience for their great participation. We appreciate all of you. I hope this webinar has been beneficial to everyone. I definitely learned a lot about how my contributions are managed, why data recapture is important, and who knew that couples could join forces when it comes to accessing 25% of their contributions for mortgage. So there's so much more that we would love to say to you, and I know 1 hour is hardly enough to do so. Our communication channels remain open across all our social media platforms, which will be displayed on your screen. Please like, subscribe, follow, and comment so that we can keep our community growing and the conversation going. This is the first of many webinars to come, so please stay connected to us. From all of us at CrusaderSterling Pensions, we wish you an absolutely amazing day ahead. Thank you very much, and God bless you.